Stocks or real estate? Which one is the right one for you to invest in? Well, the correct answer is obviously both. But since I live just outside of Vancouver in the Surrey marketplace, often I like to look at my real estate much like a stock. And particularly when I'm talking about investment properties. And I'm going to tell you more about that right after I ask you to please subscribe to join our 1,000 subscriber giveaway. Make sure you hit the like button for the YouTube algorithm because that is the best way you can help me grow this channel. And if you're looking for personalized real estate advice, make sure you go down below in the description where you can book a call with me and my team to discuss your options. Then if you like what I have to say, you can hire myself and my team to help you on to your next move. And if you don't like what I have to say, heck, we'll be on the phone. You can just hang up. Okay, let's talk about investing a little bit, and particularly real estate investing and stock market investing. Now, I'm not a financial planner. I actually have a financial planner. I'm not that smart when it comes to stocks and all of that stuff. However, both real estate and the stock market are currently at all-time highs. And it's just kind of crazy. So how do you know where you should be putting your money? Well, I'm going to give you something to chew on here. It's more of a thought than anything, but I'm going to give you some information here, and then you can make a decision for yourself where you think you should put your money. Okay, let's talk about investing, and particularly, let's start off with stocks. So many people end up putting their money into stocks because the barrier of entry is a lot lower for people just starting out and investing. If you're looking at real estate, you have to come up with that whole down payment. Stocks you can buy with relatively little money. I think on most personal trading sites offered by, big banks, it's something like $10.95 per transaction. And so that low barrier of entry is very inviting for people that don't have a lot of money to invest. You can then get into something that's very safe, like an index fund that tracks a number of companies or most of the market. And much like real estate, if you buy those index funds and hold them forever without a plan to sell, you're going to do very, very well. But the other side of stocks is day trading. And just like real estate with flipping, it's the most attractive part. It's the part that people always talk about. I made this quick buck, but it's not the best way to invest. And personally, I think if you're going to day trade or even flip houses for that matter, it's a very, very risky thing to do. And it's nothing that I personally would ever want to be involved in. But if you're buying stocks on a low level, somebody that's just getting into buying stocks, you're probably thinking of those stocks in one of two ways. Now, the first is growth. Chances are if you're buying a stock, you're hoping that company will actually go up in value. So you would buy a stock and then hopefully be able to sell that same stock for more money later on. So that is the growth model. As an example, let's use the craziness that was Google. In the beginning of the pandemic, you were kicking right around $1,000 per share. And as of today, currently sitting over $2,800 a share. So that's an extreme case of growth within a stock. So it's almost 3 times value in just over a year and a half. But that's the ideal case, but we all don't know how to time the market and buy in, and we all don't want to buy high. So a lot of investors consider the dividend route. When you buy a stock, many companies will let you share in their profits. So they will pay you out either monthly, quarterly, yearly, whatever their pay schedule is. So you might see a stock like Chevron, which actually has not risen very much, but they pay over 5% dividend throughout the year just for holding on to their stock. So now you're making 5% on your money, and you're not expecting that stock will necessarily go up in value. Well, the reason for this video is to suggest that real estate can be viewed in very much the same terms. If you're like me living outside of Vancouver or Toronto or any metropolitan area over the last little bit, you're likely living in an area that I would consider to be very much a growth stock. Your rental month to month may not even actually cover itself, and you may have to feed money in just to make your mortgage payments each month. However, if you bought a condo in the Fraser Valley just back in January for $440,000, there's a very good chance today that it's already worth almost $500,000. So even if you've had to feed that property $100, $200 a month just to keep it afloat and pay into the mortgage, there's likely no way that you've paid in as much as $60,000, the amount that the value has increased. So you're way far ahead. So now that we've discussed the growth in the market, what happens when you move out of an area? And this does apply again to an area like Vancouver, but what happens if you move out of the area where you've seen this massive growth and maybe you get into somewhere that's a little bit more rural or where the economy is down? At that point, the rent that you're getting in, or more specifically, the principal that you're paying down, needs to be looked at much like a dividend. Let's use Edmonton as an example. Markets there are good, but they're not nearly as good as they are in Toronto and Vancouver. So your property may have increased, but only ever so slightly. If you have a rental in those markets and the rent is being paid, that renter is paying down your mortgage. So in a way, you're kind of receiving dividend payments every single month. So let's use the same example of $440,000, but let's say your market has not actually increased over the last year. As long as your tenant is paying you rent and the property is breaking even, you've received over $700 a month directly on top of your principal. By the end of the year, even though the value of your property, or your stock in this case, has not risen, you have essentially received almost $8,000 in dividends or principal paid down against your mortgage, even though you haven't seen any of it come into your wallet. So you've made an extra $8,000 this year added onto your net worth, and next year that number is going to be closer to $9,000, and so on and so on and so on. And if you don't have an investment property, but you do have a principal residence, you can't really think of it then as a dividend because you're the one paying that down each and every month. But you might want to think of it as a TFSA because there is no tax on your principal residence in Canada when you go to sell. So essentially, stocks and real estate can be thought of in very much the same way. But I'm going to give you one reason why I prefer to invest in real estate first rather than the stock market. In the stock market, if you invest, let's say $100,000, you're going to see all of the benefit of that $100,000 or the loss or the dividends all related to that $100,000. But when you buy real estate, most people buy real estate with between 5% and 20% down. So that means most of the growth that you will see is actually somewhere between 80 and 95% of someone else's money. But when you sell, you then see 100% of the upside or the growth. And the other reason I really like real estate is I think companies will come and go. Sure, there's some long-time companies that you should hold and buy stocks, and they're going to do great for a long, long time. But companies can come and go, get bought out, or see hard times with industry changes. But I know one thing for certain. As long as there are people, those people are going to need somewhere to live, making real estate likely the safest investment for most people. But I do think you should still diversify your assets and your investments. So I do recommend being in the market as well as being in real estate. Thank you so much for watching. If you're interested in making a move within the city of Surrey, specifically if you're looking for an investment property, please reach out. You can do so right down below in the description. Check out another couple of videos while you're here on the channel. Please do me a favor, make sure you hit the like button before you go, and we'll see you in a couple of days.